We are back for another episode of the Social Impact Journal. My name is Jack Farron and I'm your host. And today we'll be delving into the world of financial inclusion with Sitara Merchant, an expert in the space and the Chief Executive Officer of the Swiss Capacity Building Facility, or SCBF. We'll be discussing her career journey, the work of SCBF and their financial support in driving financial inclusion, and SCBF's strategy leading up to 2030. You can listen to the episode on Spotify, Apple Music, Google Podcasts, or wherever you get your podcasts from, or you can watch on YouTube. Here is the trailer.
Well, my journey in my career was started in the US, so in North America. I worked in the cosmetic industry. And then since then have worked sort of half of my career in the private sector and the other half in the development sector. Financial inclusion for me is about protection. When you think about a family who experiences a death in the family, head of household is not able to work anymore, either through death or illness, they don't have money. So there's the component of having access to money. And financial inclusion for me is really about making people able to improve their quality of life. The Swiss Capacity Building Facility, our vision is to improve the quality of life of low-income households, smallholder farmers, small and medium enterprises, and in particular women. So women is sort of a very targeted audience for us. We have an outreach of about 68% of our projects. We provide financing for technical assistance. And our grant is more catalytic. It's able to help those mid-stage startups to really scale. Today we have technical assistance grants that are very project-based. What we're adding on is other financial instruments, and these are more like returnable grants, impact-linked finance.
Welcome to the show, Sitara. How are you this morning?
Thank you, Jack. Very well, thank you. How are you?
Yes, I'm okay, thank you. I'm out in El Salvador, Latin America. I know you're over in Switzerland.
I am, yes, just outside Geneva. So
wonderful. So I'm really looking forward to this conversation. I know we've tried for a few weeks to get this going, and there'll be a lot of listeners out there in the financial inclusion sector. The first few episodes we actually recorded were focused on financial inclusion. I know we've taken a little bit of a break in other areas, so it's good to get back to this focus area. So before we dive into your work and the Swiss Capacity Building Facility, it would be great to understand how your career started and your journey within finance and the financial inclusion space.
Well, my journey in my career was started in the US, so in North America. I worked in the cosmetic industry. And then since then have worked sort of half of my career in the private sector and the other half in the development sector. So in 2005, I was recruited to the Aga Khan Development Agency, where I worked with them in different capacities. And the last capacity, which was I think started in 2011, I worked in the financial inclusion space. It's been something that's very dear to my heart. And since 2019, I've been working with the Swiss Capacity Building Facility.
Excellent. And moving from the private sector to the development sector, what was that like in the first few months? What were the most notable changes?
The biggest one was really understanding what development was about, really understanding what happens on the ground, how people live, how low-income populations live and their challenges. I mean, I grew up in Tanzania, so I was quite familiar with how low-income populations live, but looking at it from a lens of how do you make available financial products and services to these populations became even more critical. I don't think as a kid I understood the nuances of the importance of access to finance.
For sure. And I know there's a lot of different definitions around what financial inclusion actually means. So it'd be great to get your opinion on that, and maybe has that definition changed in the past few years since you actually were working in the space?
I think financial inclusion for me is about protection. When you think about a family who experiences a death in the family, head of household is not able to work anymore, either through death or illness, they don't have money. So there's the component of having access to money. And financial inclusion for me is really about making people able to improve their quality of life. So they're able to access money, and if they have access to financial services, they're actually able to access essential services like basic things like food, health, education. They're able to improve their economic lot in life, so they become more economically empowered. And it really builds resilience. So coming back to that family, if that family had a health insurance, they would be able to recover more easily from illness in the family or even death in the family.
For sure. And you've mentioned around some areas of insurance there. So I think we'll talk about that later, as I know SCBF have a large focus on insurance. So financial inclusion, you mentioned around improving the quality of life and accessing financial services, but even being given access, being able to, actually use those services. So looking ahead to the next few years and how the definition of financial inclusion is evolving with new technologies, do you see that is really about usage now, about those that can make access? How can they use those services to improve the quality of their lives?
Yeah, you've hit the nail on the head. I think in the early days, you're asking how financial inclusion has evolved. In the early days, it was really about access. Can they access? And what you saw was, yes, people would have access to a bank account, but it would remain dormant, for example. And I think a lot of it was also centered around brick and mortar, so microfinance institutions. Today, what we're seeing, or what we've seen as an evolution, I call it, so the next step evolution is the digital financial services. So we're seeing access to more digital financial services, and even in digital financial services, people were accessing accounts, but again, usage became a really important component. And now what we're seeing more and more is embedded finance. So provision of finance within a particular product or service. So the common one that's often referred to in the sector is the pay-as-you-go. So solar. So that is really, I think, where the sector is going. I think what also has the sector's learned from is that it's a bundle or a package of financial products and services. It's not just, we're going to provide you with a loan, we're going to provide you with savings, but it's actually adding on things. For example, if you look at a farmer, adding on information about prices in the market so they know when to sell. It's about providing them with information around when to grow their crop, what's the climate going to be like, what's the weather, how is it going to impact. So we're really looking at a holistic element around financial services.
Yeah, that's very interesting. And I've seen even development players in the space now looking at what classes as impact. It's not the number of bank accounts reached or the number of policyholders, but it's that next step now of following the usage, how they have actually used that product. So the Swiss Capacity Building Facility, for those that don't know about the organization, what is the core vision of the organization, and also what is your role?
Sure. The Swiss Capacity Building Facility, our vision is to improve the quality of life of low-income households, smallholder farmers, small and medium enterprises, and in particular women. So women is sort of a very targeted audience for us. We have an outreach of about 68% of our projects have reached women in some way, shape, or form in terms of outreach. And as I mentioned earlier, how do we do that? That's really what we look at. Is we provide financing for technical assistance. So to a concrete example, a financial sector partner, somebody who delivers financial services, comes to us and says, we have identified a technical assistance provider that can help us develop or improve our existing insurance product. Would you fund us to tailor it to very specific segments? So that's our core business. We're looking at tailored, client-centric products and services for low-income populations.
Excellent. And as an organization, what makes SCBF so unique?
What makes SCBF unique is we're a public-private partnership, a platform rather. And what does that mean? Again, I'll walk you through a story. We have members, and members consist of Swiss Re. They are large insurance corporations, as well as Swiss Development Corporation, who's one of our main funders. And what they do is they bring to us projects. So I'll give you the example of Okomali. They came to, so Allianz, who's one of our members, brought Okomali as a project to us. And they said, this is a really interesting project. And Okomali provides index insurance for smallholder farmers. So that means basically you get paid out on insurance based on remote sensing technologies that determine whether you had too little or too much rainfall, for example. It's very simple. In the past, you would have companies that would have to go out and assess the damage, and based on that, and it's very costly. So provision of insurance to low-income farmers or smallholder farmers was very difficult because of that added cost. Now with remote sensing technologies, the costs have gone down. So coming back to what makes us unique, in that circumstance, Allianz, one of our members, was able to bring that project to us, and we reviewed the project, we understood the importance of the project, and we decided to fund it. In the process of reviewing the project, we had other members review the project. And these are subject matter experts that are in the field, that are able to look at a project and understand whether it's viable or not. And so instead of having those high-cost subject matter experts on our staff, we have them in our member base. And because they're working on a day-to-day basis in the field, they're able to provide more relevant and more current advice than even if we were to have somebody on our staff. So that's the first component. The second component was that SDC, the Swiss Development Corporation, was able to connect Okomali to some of the local ministries so that they could overcome some of the local regulatory hurdles. And then Allianz was also able to introduce them to farmer cooperatives so that they were able to grow their client base. So when they started with us, they had about 300 clients. Today, they have about 10,000. And our grant is more catalytic. It's able to help those mid-stage startups to really scale.
So for a startup such as the InsurTech you've mentioned, do they need to be in a partnership with a member in the SCBF network to apply for funding, or what does that process look like?
They don't need to. It makes it easier because then it lowers the amount of due diligence that we have to do, but they don't need to be. We've found that over the last years, we've actually increasingly had more projects that have come outside of our member base, more meaning 30%. It used to be 100%. From our member base. Now it's actually shifting a little bit, and we're really looking for innovation. So we can give funding, and we do give funding to those that aren't associated with our member base, but that means that we have to connect you with our member base to do the due diligence, and we do that. For
sure. And for those that are listening now, you can find the member list of SCBF in the show notes or in the YouTube bio if you are interested to meet the members. I understand there's around 30 members within the network.
We have 30 members, yes.
Okay, great. And if I'm an organization, if I'm a startup that's looking for funding for technical assistance, is there a geographical barrier to where you implement projects, or do you have a global outlook?
We do have specific countries, and that's also on our website. So we do have a link that we could probably share. We work basically in Sub-Saharan Africa, in the MENA region, South America, and Asia as well. So we're pretty broad, and there are a long list of countries that are eligible. It has to basically fundamentally be a low-income country for us to work there or fund.
Understood. And is there specific grant windows in the calendar year, or it's a rolling basis for applications?
It's a rolling basis for applications. What we look for is we look for the grantee to come to us, and then we basically structure the approval process for that particular project. But we do invite people. So we start with a process where you would come in and say, look, this is the concept I have. We would have a discussion. We would then invite you to do a concept note. Depending on that concept note, we would then invite you to do an application. We do it that way because we want to make sure that it really meets our needs and what we're looking for.
For sure. And I think we've started to touch on one of your key pillars, which is innovation and product upscaling with the the case study you gave with Oko and Allianz in Malawi. So I read your annual report last year, which was really great, by the way. And I read a stat that 47% of clients received by partners in projects co-funded by SCBF received insurance products. So nearly half of those projects were focused on insurance. So is there a particular reason why as SCBF you have such an interest and a focus on providing funding and technical assistance to micro-insurance projects?
There is. I mean, there's a few reasons. One is climate change. So climate change poses an existentialist threat to the planet and to livelihoods. I mean, we know the effect that it's having on low-income populations. So the importance of climate and insurance is a key mitigator for that. The second is we have a large number of insurance companies as part of our member base. So they really have that expertise and they are able to bring in some of those projects. And I think, I mean, that insurance is our biggest, as you noted, our biggest sort of area of focus. And I also think that not many people have done insurance. We're seeing now more and more organizations, doing more on insurance, but I think we have probably the longest history out there on funding financial products in the insurance space.
Yeah, no, I would agree. It was quite refreshing when I saw it. So, my background started, a few years ago in London in the insurance sector. So it was really great to see that. And I think there's a lot of new players coming out, especially in sub-Saharan Africa in the micro insurance sector. So from those years of experience of collaborating and co-funding on those projects, what are, let's say, if we take two areas, the two key challenges of insurance adoption, micro insurance adoption?
I would say, I mean, it's hard. And I get frustrated even saying this, but one of the main ones is knowledge. So do low-income populations really understand what insurance is? And in many parts of the world, they don't. It's very different from providing a loan or savings. Even savings, they need to know that their money is still there and they're getting interest. But with insurance, you're paying something, and if you don't access or make a claim, you don't get any value from it. And to me, that is the most difficult challenge that we face, is how do you say to someone, you're hedging on something that may or may not happen, and they've got to pay for that. And so it's really the client literacy element around that. And it's beyond just literacy. It's around, I have a certain amount of income on a monthly basis, and I'm going to pay $1 or $2 a month, whatever that is, to something that may or may not happen. And in some populations, hedging on a disaster is actually not aligned with their sort of cultural practices. So one has to also be careful with that.
Yeah, no, for sure. I think there's so many challenges, and I've seen a lot of different companies deploy different tactics around mindset transformation and trying to give value before the claim is made. So that might bring me on into another pillar of SCBF's work, which is financial education. So I know you also have a big focus on this and increasing the financial literacy and education in projects that you support, which also includes insurance training. So we've just discussed about those challenges, because I think everyone in the sector knows the importance of capacity building, of education, but that's really easier said than done, especially in insurance. So in some of the projects that you've co-funded, which different innovations or methods have you seen that have been deployed to increase low-income communities' understanding of insurance, but also of other financial services?
So I think one of the main things that differentiates us from other sort of financial education projects is really that we fund is we link it to a product, so that you can see the conversion rate. You can see what's working, you can see what's not working. So for us, it's not about financial education for the sake of financial education, which is important. But if you don't, like anything, if you don't use it, you're going to lose it. So I think that's the important part for us. In terms of the innovation, some of it is gamification. So understanding how do you gamify a particular making it sort of challenging and interesting to learn? How do you embed it in other other services that you provide? So if you're looking at a smallholder farmer and he or she is looking at some technical assistance on how to farm, on input selection, things like that, you embed it within that. So there are innovations that are out there that are coming to fruition, but there isn't a lot. I mean, I think that's a challenge. And I think the biggest way to increase adoption has been if one farmer sees the benefits, then the other farmers adopt. And I think that's the same. I'm using farmers as an example, but it's across the insurance sort of sector. It's word of mouth, as we all know.
Yeah, and I've seen a lot of claims payout ceremonies being used with big checks, and the payouts being used because, of course, then they're going to tell friends and family within the community, and especially in rural communities, that message can spread quite fast. And you touched on a point around the importance of education being linked to a product. So I remember when we started Rural Inclusion back in 2021. The very first pilot project we had in Uganda, we tested a digital financial literacy curriculum. And what we saw was that training on things like budgeting, they worked really well because they don't need to be linked to a product. Now people can use that knowledge with their own materials and start creating and sticking to those budgets. But when we taught about crop insurance, the question was, okay, well, which products are on the market? And when you're not able to provide that product, it's, if the education can't be actionable, then actually you said, use it or use it or lose it. But also it's a case of now that someone may have a great understanding of insurance, if they don't have access to the product, it really reduces the effectiveness of the training. So SCBF strategy of linking that training to an existing product that's offered is a great strategy. So is this linked to the innovation and product upscaling? So for the insurtechs, for example, the financial education funding is embedded into that, or it's a separate funding?
It can be a separate funding, and we look at it if we can cover it within the innovation and product upscaling window or that particular funding, then we do. But if it requires, if it's a region or a context where there are a lot of people that have no exposure, then we actually can have a separate project on financial education.
Okay.
We do a lot more projects in the first window, which is the innovation and product upscaling.
Okay, well understood. So a third element is feasibility studies. So I understood and I've read that you've worked on a number of interventions that you've co-funded with different partners. So how crucial are these studies for financial service providers? And is this something that you roll out before the innovation and product upscaling? I'd like to just understand the roadmap of these different pillars.
Sure. For the feasibility studies, they are, again, we don't do as many of them. And really the thinking there, as you pointed out, is you do a feasibility study, but we're really looking for that product upscaling. And so, for example, we are funding, or just finished funding a project with Habitat for Humanity, where they provide technical assistance, and they're working with an organization called KCB in East Africa. It's the largest commercial bank. And what they're doing is they're basically determining the business case. So the feasibility is around determining the business case for housing microinsurance for low-income homeowners. So you're looking at property, and that's very new. So the feasibility study becomes really important for either a very new product or a new market. And there, at the end, the study will basically include a market mapping that investigates basically the supply side of property insurance in Kenya, and then the demand side research as well. And then basically provide based on the understanding of both the supply and demand side, provide basically a framework of what the product could look like. And then a project like that and we really look for them to move into that product upscaling. And so property insurance, as I said earlier, it's not been done a lot. And in this case, it could really be a game changer in the market. So we're almost using the feasibility studies to start new projects and catalytic, because we do work. I mean, if you say, well, why are you working with KCB? which is the largest commercial bank, it's because we're de-risking that project so that they would actually launch and then go into the market.
So it's providing that first kind of platform so that then sustainability can come afterwards.
Yeah. And we make sure, so we won't fund. So for example, in that case, we're really not pushing, but encouraging or enabling a private sector player to be able to go down market to provide a product or service that they have some expertise in other segments and really go down market.
Awesome. So if I'm someone's listening and they may think that actually what they're building fits the eligibility criteria, what is the average length of a project for the innovation and product upscaling, and the total or the minimum and maximum grant sizes that are offered by SCBF?
I'll start with what our grantees say to us on a regular basis is don't lose the fact that you can turn around a project and have grant money in your hands within 8 weeks at a maximum. So we're pretty fast, 6 to 8 weeks. So we're very quick at turning around, and there's nobody that we know of that's out there that is able to do that. The second, on the amounts, we have a maximum grant amount of about 150,000. As you can imagine, this year being 2023, we've hit our limit around all the projects we can fund this year. So our pipeline's full, but we encourage people to come to us with innovative projects. So the grant amounts are 150,000. The durations are no more than 2 years. We also look for a contribution, so from the private sector player, so to ensure that they have skin in the game. And so there we're looking for them to contribute a minimum of 20% and ideally more, but we won't consider staff because those are already sunk costs in an organization, but we consider in-kind contributions. So if you've got a consultant going to the field, paying for their accommodations, paying for their transport, those are the types of things. And then we require a minimum of 4,000 new clients reached. So in terms of outreach, we obviously look at different proposals and make sure that the higher that, if there's a proposal that's doing two proposals doing the exact same thing, and the outreach in the first proposal is 10,000, of course, we're going to push for that. So.
Absolutely. And just to check, the 150,000 is US dollars?
It's Swiss francs.
Swiss francs, okay. So looking forward to the future. I know that as the SCBF, you have released a new strategy. So I'd be really excited to hear more about that and how the model is is changing and adapting over time.
So we will continue to work in the financial inclusion space. That hasn't changed. That's the only space we work in. Our vision remains the same. What we're doing is adding on, today we have technical assistance grants that are very project-based. What we're adding on is other financial instruments, and these are more like returnable grants, impact-linked finance, so really paying for an outcome, not a result, so it's a little bit different. And the reason we're doing this is what we're seeing is there's a lot of innovation in the space, and there are basically what we call pioneer gap companies. So those are the companies that are not startups exactly. So it's not friends and family funding, but the next stage up where they have, and for us, it's where they have a tried and tested business model. And what we're looking to do is really support them in that gap where they can't find funding, commercial funding is not available, local funding is not available, and even venture capital is sort of like, not sure. And so we're really looking at staying in the venture philanthropy capital, but really providing more capital, other types of capital instruments. So those are the main instruments that we're looking at, and we're looking at helping these or enabling these organizations, these young high impact enterprises to cross that pioneer gap. So that's really the focus. The other component that we're adding is we're adding a focus on sort of focus areas. So we're looking very specifically at health financing. We're looking very specifically at climate insurance and resilience, which is our mainstay, but continue to have that. Agricultural finance. And last but not least is housing finance. So, and we will continue to have a broader bucket, but that will be sort of for very selective projects. But those are the 4 focus areas that we have going forward. So new instruments, focus areas, but vision and all of that remains the same.
Great. And when is this coming into effect? So when opportunities for the impact link finance and the other instruments you mentioned, is that available right now, or do you have a date when that will be launched?
We have a soft launch right now for those. We are currently fundraising, and so really looking for partners who will support us and join us in the journey. We think it's a really important space that we as a development sector, and particularly inclusive finance, need to focus on. And so we're fundraising. We hope to be able to finish our fundraising towards the end of next year and finalize also the details of our strategy. So we have a very high level strategy. We're working on the very specific sort of detail outline. So next year, hopefully.
Wonderful, wonderful. Sitara, it's been really great to have you on the podcast. I have one final question before we finish, but first of all, for anyone that wants to learn more about SCBF and have those updates of the new strategy, we'll link the website, of course, and have that running down below for those watching on YouTube. But where can people find you on social media?
I'm on LinkedIn, so Sitara Merchant on LinkedIn, easy to find me.
So I guess a question I asked to all of my guests before we finish off today. So within the Social Impact Journal, if you had your own page to write, and this was for a young professional that had just graduated from university and is coming into this financial inclusion space, or maybe is looking at the traditional finance space and financial inclusion, and like me a few years ago, didn't really, there were so many opportunities and possibilities. It's hard sometimes to know where to look. What piece of advice would you give to them?
I would say go and live in a developing country. Or I know the term is controversial right now, but go live in a low-income country and go understand what these populations are faced with day in and day out. Go to the rural areas where they are living. It's not enough to go to Cairo or wherever and stay in the city. You've got to go out and it's like what you did, Jack. That's exactly what's needed. And maybe you can share a little bit about what you did. But that's, I think, so important.
Yeah, no, for sure. I think, for sure. I think to be able to, for someone coming into the sector, I guess it depends what let's say in financial inclusion, what their focus area is, right? If it's towards agriculture, then of course, rural communities, being able to spend some good time, and that's not one day of driving in, having a one night and then going back to the city and being in a hotel. You really need to understand, how those target customers make a living, right, and what they have to do in their day-to-day lives before really jumping in and co-creating any solutions. As I said, Sitara, thank you so much for your time. It's really been great to have you on the show, and the work of SCBF is really inspiring, and I hope those listening also think the same, and will be reaching out and preparing their applications for different innovations and projects next year.
And I hope donors can join us in our journey. So
absolutely.
Thank you. This has been really special. Thank you so much.
Thank you so much. Thanks.